Hello and welcome to the weekly roundup. We do hope you're enjoying these weekly reports, and please feel free to subscribe to receive free stock market content. Also, if you've got any questions, pop them in the comments box below. And finally, we would like to welcome you to follow our free market sector reports on tech stocks, banking stocks and IPOs using the link in the descriptions box below. So what a week. The big show in the US elections. At the time of recording, there's still not a clear winner, although Joe Biden does appear to be taking the lead. The markets have actually rallied across the week so far, and what's really been a key point here is what's been happening actually in the Senate election. So far, the Democrats have not been able to flip the Senate from the Republicans. So what this means is, even if Joe Biden does win the elections, if we keep a Republican Senate and the House of Representatives remains in the hands of the Democrats, we've got a split Congress. So those big tax hikes, which Joe Biden was planning for, are unlikely to happen whilst the Republicans have control of the Senate. On the other hand, it does mean that the big US stimulus package that we were hoping for to help the US economy through the coronavirus crisis is probably unlikely to happen as well. But in fact, markets were cheering that sort of steady as she goes. This is a Congress which is known. There's going to be no major changes as far as policy is concerned in the eyes of the market, and that's really boosted risk sentiment. We've had the S&P is trading up 7% so far this week. The Dow is also up around 7%. The Nasdaq has surged just shy of 10% this week. So we've seen big tech stocks have really soared higher. Now the reason for this could be because with a split Congress, there's very little chance of sort of those new laws which would be damaging to the big tech stocks being pushed through. Also, let's not forget that we have also seen that the tech stocks have really been in favour throughout the pandemic. So we've got more of the same, as we've got US coronavirus cases are sort of up at the 100,000 new cases a day. So that's also giving the tech stocks a boost. This risk on trade, which has been happening across the US, has also spilled over into Europe. The DAX is up around 7% this week. The FTSE is also trading up around 5% higher. There's also been central bank action this week. The Bank of England actually surprised the markets. Now, whilst they kept interest rates on hold at 0.1% as expected, they did up their QE programme by adding another £150 billion to the programme. Now, they were expected to add around 100 billion, so that's more than what was forecast. And on the same day, we've also had Rishi Sunak, our Chancellor, extend the furlough scheme. It's a very generous scheme, and that's going to be now pushed out until March. So those moves have also supported the market on the day that the UK actually went back into its second lockdown. In the currency markets, we've had the US dollar has dropped quite significantly. It's down around 1.7% across the week on the back of the US election trade. Now that's offered some support to sterling. The sterling US dollar is trading up over 131. Brexit talks continue. There hasn't been much progress, but the fact that they're all sat around the table still is offering some hope to pound traders that a deal will be pulled through. Looking at single stocks. Now, retailers have been very much in focus this week. We've had some big names reporting. Let's start with Sainsbury's. Now, they actually dropped around 5% on the day that they reported. They reported 3,500 job losses. They're going to shut around 420 Argos shops, and they also reported a first half loss of £137 million, which they blamed on changing conditions. But actually across the week, Sainsbury's have managed to pull themselves back slightly, and they're actually looking to end the week around flat. We've got Ocado. Ocado have rallied just shy of 10% across this week after they upped their full year profit guidance to 60 million from 40 million pounds. Now, Ocado has really been a success story from the coronavirus crisis, as they've seen a huge demand for online shopping. Just following on from Ocado, we've also had Marks and Spencer's report this week. They've traded 9% higher across the week, despite reporting their first loss in 94 years. They reported a loss of around £87 million, and this is owing to the collapse in clothing sales and home sales. Groceries, however, have been doing much better, especially with the joint venture with Ocado. Marks and Spencer is really reaping the reward of that joint venture, and that is what's been helping to boost the share price across the week. Just quickly popping it over to the US, we've got Uber. They've been in focus this week. They've traded up around 15% the other day, on the day that they won a vote in California, which means that they do not need to change the status of their drivers to employed by the company. Also, we've had Primark owner AB Foods report. Now, Primark does not have an online presence, and that has been a real problem for them throughout the lockdown period that we've had, but also through this upcoming lockdown period. They've obviously got stores across Europe which are also closed, and they're going to have stores, well, they do now have stores in the UK which are closed as well, and they're expecting to miss around 375 million in lost sales across this second lockdown period. Now, that comes hot on the heels after their first 2 quarters, which were not strong quarters. They did see some underpinning from the grocery section of the AB Foods business, but Primark is a definite weak spot whilst the stores remain closed. Just quickly, in the US, as I said, FANGs have been outperforming on the back of this US election, and also with rising coronavirus cases there again. The other one that's had a good week has been Uber and Lyft. Now, they jumped around 15% and 17% respectively after they won a vote in California which said that they do not need to employ their drivers. Their drivers don't need to be employees. So that's going to have a really big impact on the company financially, that doesn't have to be the case. Thanks very much for watching. As I said, please do remember to subscribe, and if you've got any questions or comments, pop them in the box below, and finally, have a great weekend.